Welcome everyone, and thank you for joining us this afternoon. Cardinal Services specializes in providing workplace solutions to employers, including full-service human resources. We are interested in keeping employers abreast of the changes in employer requirements. Therefore, today we have Erin Carmack, our CEO, and Amanda Poe, one of our HR specialists, who will be presenting information on the 2017 legislative updates. Now, you may submit your questions during the presentation, and we will address as many as we can at the end of this presentation. Without further ado, let us welcome Erin and Amanda.
Thank you, Celine. So we're nearly a month into 2017, and as we look back at 2016, we are once again reminded that employment laws are constantly changing. Today we will quickly recap hot topics and issues focusing on items relating to you as employers. The Trump administration began just 5 days ago on January 20th, and the Oregon legislative session starts on February 1st, so there will be some speculation on our part. At the policy implementation level at the Department of Labor, Mr. Trump picked Andy Puzder, CEO of Hardee's and Carl's Jr. Restaurants. He has spoken out about minimum wage increases, changes to overtime rules, and could also reduce resources for wage and hour enforcement, or even change fiduciary rules on 401k plans. Mr. Trump will name 3 new members to the National Labor Relations Board. Keep in mind there are only 5 total, so theoretically there might be some changes in how employees and labor can organize. For example, there was a recent ruling where an employee complained about pay with another employee. The other employee did not say they wanted to be in a collective bargaining agreement, but the NLRB determined that the employee did not actually opt out either. So for now, employees still have the right to talk amongst themselves regarding their working conditions, including pay. It is generally expected that the Trump presidency will mean a more employer-friendly climate. Many experts believe that he will roll back many of Obama's executive orders. To roll back rules, there are procedures that need to be followed. You have to create a group to propose the changes, allow the public to weigh in on any proposed changes, etc. So it can take up to 6 months or a year depending upon the changes. I think one of the biggest surprises of 16 was the ruling issued by a judge in Texas. This halted the implementation of the U.S. Department of Labor's increase to the salary threshold under the Fair Labor Standards Act. This stalled the rollout of these regulations nationwide, and many employers spent considerable time and resources preparing for compliance, many of whom have already hiked up salaries or reclassified their employees. The government has appealed the ruling, and the U.S. Court of Appeals agreed to expedite the appellate process. There have been hints that the Trump administration may drop the appeal or consider a lighter revision, perhaps increasing the salary threshold to a lesser amount instead of doubling it. Only time will tell, and Cardinal will continue to work with our clients to ensure your employees are classified correctly and help you comply. And of course, we'll publish updates in our newsletter as well. So let's talk about OSHA. First, there's a rule that employers with 100 or more employees in a single workstation have to report their injuries on the OSHA 300 form. As a part of this rule, they snuck in the ability for OSHA to cite employers that do post-accident drug testing in a retaliatory manner. So the agency tasked with making workplaces safe wants to discourage post-accident drug testing. Now, in my experience, most employers will agree that not doing drug testing will not make workplaces safer. So the bottom line is that OSHA wants to make sure that post-accident drug tests are not a form of retaliation. So having a blanket policy may be perceived as retaliatory. Best practices under federal OSHA is to test those who show signs of impairment and caused the accident. If you have employees working in a position where they can hurt themselves or hurt others, or in a safety-sensitive situation, it's imperative that you have a solid drug and alcohol policy in your handbook. Now we move on to that wonderful federal Form I-9. Everyone should know about this form, as it's been a requirement for all employers in the U.S. since the 80s. This new version is what the government calls a SMART form. It has drop-down menus and pop-up guides to assist the users. Yet, you still have to print it out to sign it. Too bad we can't use E-Verify instead of collecting so much paper. Effective January 21st, this is the only acceptable and compliant version you may use. So watch for our upcoming webinar summarizing all the changes. And now I'll pass the reins off to Aaron, our CEO, to elaborate on the ACA.
Thank you, Amanda. We're 5 days into this new administration. Already there has been quite a bit of speculation how Obamacare might be repealed and replaced, but there are few proposals that have been made public. So some of what I'm going to comment on is guesswork, but a prediction that I'll stick to: carriers losing money will continue to raise rates. We can see that in the current rate increases. And my second, any changes will take at least a few years for a replacement plan. Think about how Obamacare was rolled out. The law was signed 1 year into Obama's presidency, and the first exchanges opened 4 years later. And even with all that time, things didn't roll out smoothly. Another concern with a replacement plan is that rates may increase significantly from even where they're at now. As we all know, health insurers try to pick rates that are going to cover the cost of operations and expected medical costs. If the new individual plans are substantially different and you're setting up a new market, insurers are going to be conservative and they're going to charge a higher amount in premiums because they don't actuarially know what the risk is. So we're all waiting to hear proposals. And another possibility is that Oregon, if the Affordable Care Act is just repealed, another possibility is that Oregon could act alone, maybe a single payer plan. One bright spot in the Affordable Care Act are the small group plans. We'll go into pricing in a moment, but I wanted to go over why if you have an individual plan and you're a business owner with employees, you might want to take a look at a small group plan. There are going to be many variables, like comparing individual versus small group pricing, whether or not you can get a small business tax credit, writing off business expenses from your taxes, what your subsidy could be in the exchange. All of these things are going to require help from a health insurance agent and a CPA. But as rates diverge, it might make more sense over time. And here's where we segue into the Oregon material. Remember, health insurance in Oregon is regulated at the state level. And let's begin with the percentage of rate increases between individual and group plans. And note that I grabbed rates. This is from one region. I think there are 5 regions in Oregon for a 40-year-old, non-smoker, single. And there are more insurers than are listed, but I tried to summarize it here to show you a trend. Note that the individual plans had double-digit rate increases. Around 25% increase was pretty common. The small group, by and large, pretty much unchanged. And there was one outlier in the small group rates at the 16%, but otherwise they were pretty stable. So we saw the percentage increases. Let's look at the actual prices. So you can see the cheapest individual silver plan, $312 versus $276 for the cheapest small group plan, and these are the Oregon Standard Silver plans. So 12 plus 24 is $36 per month. It's not a huge difference. But what happens next year if that individual plan goes up by 25% and if the individual plan goes up by 25% and the small group plan stays just about the same? That difference is going to be a little over $100 per employee per month. I think the gap between individual plans and small group plans is only going to grow. Also, there's a chance that individual rates will have such bad adverse selection that carriers and consumers will start to pull out of the individual exchange. That said, we're not in a death spiral at this point, as enrollment numbers are holding up well. And before anyone notes that the increases in rates and the increase in rates for the health insurers and thinks that they're just making a bunch of money, in 2014 and 2015, Oregon carriers had average losses of 8.4%. The Oregon legislative priorities. think the legislature was watching to see if Measure 97 had passed. If it had, they'd be busy finding ways to spend the money. Since it failed, I think they're going to be busy plugging that $1.4 billion hole. There are quite a few proposals out there, sin taxes, budget cuts, and an interesting one called looking at increasing revenue from a commercial activity tax, where they're talking about eliminating the corporate tax and coming up with a specific percentage for all businesses. So there may be new business taxes coming. Did note that there doesn't appear to be any consensus, even though one party holds all the levers of power. And this could keep the legislature focused on this issue instead of employment-related matters. That said, I am aware that this is on the legislature's agenda. Secure scheduling, think of it as predictable schedules for employees. San Francisco passed a law in 2014. Last year, so did Seattle. And the reason for the law in Seattle, the backstory is that there are baristas from a large corporate coffee chain. They held a protest in front of the corporate headquarters in Seattle. Then protests started to spread to other food service establishments, fast food to start with. And just as an example of one of their complaints, they'd have employees working a closing shift, working until midnight, and then said, aha, you have to come back here at 6 a.m. the next morning to open up the shop. And note, for both of these laws, it applies slightly differently to large employers. And in one case, it's retail, and the other retail and the food service. Take a look at the San Francisco law, 2 weeks advance scheduling, and if you make any changes to those schedules, you pay 1 to 4 hours of pay. Essentially, the less notice you give, the more you pay. Another interesting thing with the San Francisco law is if you have extra part-time work, you have to offer it to existing part-time employees before you hire additional employees. So what's Oregon likely to do? Well, both city laws had 2 weeks advance scheduling, so it's a good bet that's going to take place. Also a good bet that it's going to apply to some size, employer size, to make it large employers. And it's a really good bet that they're going to have some penalties if you call employees into work. Probably like the two city laws, service industries of some sort are going to be the ones affected. At this point, I'd like to pass the presentation back to Amanda as she does some cleanup on the Oregon sick leave law.
Thank you, Aaron. Now, the biggest change in Oregon, and one of my favorites, is Oregon sick time. 1 year ago, we became one of only 4 states in the U.S. to require sick time, and it applies to all employers. If you have 10 or more employees, you must implement a paid sick time policy. For employers within the city of Portland, the magic number is 6 or more. The policy requires that every employee accrue and be able to use 40 hours of paid sick time every year. If you have fewer than 10 employees, 5 or less in Portland, then you must provide unpaid sick time. BOLI's safe harbor grace period has now ended, and it's a waiting game to see what complaints they decide to pursue and investigate. Remember that interference with or retaliation for the use of sick time is an unlawful employment practice, and BOLI may assess civil penalties for violations of this law. Meanwhile, several counties have filed suit stating that paid sick time is an unfunded mandate. And this has now stalled the revised Oregon administrative rules from being published, and now we all patiently wait to see what happens next. So let's talk about some common sick time questions. I get calls from employers who say, my employees are abusing sick time, so I want to discipline them for a pattern of abuse, which is allowed under the law. But here's where it gets tricky. Is it a pattern of abuse if they call in sick 3 Mondays in a row, or is it the 4th? We don't know. The law does not define this, and the Oregon administrative rules don't help either. Nor do we have any case law yet. So let's say it's the 4th Monday in a row. You have no other performance issues with that employee, and you really want to terminate them due to pattern of abuse. You have to ask yourself if you want to be the test case, or give them some rope since they only have 8 hours left to use this year. You have to take into consideration all the factors and decide how much risk you are willing to take. Yes, it costs you money as an employer when your employees don't come to work and you still have to pay them, but it could potentially cost you a lot more if you terminate them for a pattern of abuse and then bully later determines that the sick time was actually for a qualifying reason. Another common question is, do I really need a policy? Well, yes, absolutely. It's difficult to discipline an employee if you don't have an actual policy in place. This is a great time to update your employee handbook. Go through it and check for issues. A good example, we have an employer that had historically paid out unused leave. They had a PTO policy, 40 hours a year, per their policies in their handbook. Then they switched to an accrual system, which requires the employee to be able to accrue up to 80 hours of leave. Needless to say, the employment relationship ended on a bad note, and ultimately that employer had to pay out more hours than they wanted, all because they didn't update their actual policy in their employee handbook. So many employers implemented a PTO or sick leave policy effective January 1st, 2016, since that was when the new law was effective. For employers using the calendar year for their policy, that meant that their benefit year just ended on December 31st. For employers using the front load policy, there were quite a few employees that realized they were going to lose 40 hours at the end of the year because it is a use it or lose it policy, meaning their sick time wasn't going to roll over into January and they felt entitled. So there was a spike in employees being sick during the month of December around the holidays. Now, if you found yourself in that situation, you could switch your policy to be based on an anniversary date. This can be tricky, so be sure to contact Cardinal to help you implement or transition your policy to be a compliant policy. Since you rolled out your new sick time policy, have you explained to your staff how it works? Employees are supposed to call in sick as soon as they reasonably know that they're going to be sick. So you need to make sure they know who and when to call and then hold them accountable to that. Although you can't discipline them for using the actual sick time, you may address proper call-out procedures. Hopefully you all receive our newsletter. This is where we address some of our common HR questions. In the past year, many have been about Oregon sick time. If you don't receive our newsletter or know someone else who should, visit our website today to get signed up. It's as simple as entering your name, business name, email address, etc. Unpaid sick time is generally not an issue. Say you have one employee, they get the flu. It's inevitable. Everybody's going to get sick sometime. They don't want to work. You don't want them at work getting you sick. They don't get paid for the time that they aren't working. So they really only take time off if they really need to take time off. Pretty simple. But what happens if they start taking a bunch of unpaid time off later? If you did not track the unpaid sick days, then it's very risky to now discipline them for missing work. One of the biggest headaches for employers is tracking that unpaid time off. Cardinal has you covered here. We track all paid leave for our employers, and we even provide tools for employers to track unpaid time. Now, starting January 1st, employers must include more details on itemized pay stubs. This includes the employer's phone number and their address and their business identification number. So having only your logo and your company name on the paycheck for the employee is no longer compliant. Now, also effective in 2016, OSHA-covered employers are required to maintain health insurance coverage for OSHA-covered employees and their dependents during family leave on the same terms as if their employee continued to work. Now, keep in mind, the employee must still continue paying for their portion of their premiums during the period of leave. This amendment brings OSHA closer in line with FEMLA, the Federal Medical Leave Act. Employees now have whistleblowers and paycheck transparency protections in Oregon. It is an unlawful employment practice for an employer to take a negative employment action against an employee who has asked about, discussed, or participated in conversation regarding wage information. This law also prohibits employers from retaliating against an employee for filing a complaint or participating in an investigation based on wage discussion. So, in short, employees have the right to talk amongst themselves regarding their working conditions, including pay. The exception to this law is that it does not protect employees who have access to wage information of other employees as a part of their job, such as payroll managers or HR managers. And let's not forget about our world-famous Oregon 3-tiered minimum wage. Our next annual increase will be on July 1st, when the statewide standard will grow to $10.25 per hour, increasing the Portland metro area to $11.25 per hour, and the non-urban counties to $10 per hour. So that's some Oregon highlights in a nutshell.
Thank you, Erin. Thank you, Amanda. Now let's get to some questions here. All right, regarding sick leave and employee count. If I own 4 different businesses with different FEIN numbers and they do not cross over at all, do I need to count all the employees per business or total number of employees based on the number of employees, my spouse, and I have total at all businesses?
That's a good question. It looks like that all the businesses that are combinable should be counted across the board, and so you take that total number. In terms of whether or not to count the employees, whether it's an owner or a spouse, it's really only if they're being paid as an employee. We haven't seen anything any specific ruling, any case law on this, because as Amanda mentioned, 2016 was a safe harbor year, so Foley hasn't pursued it. But that's the best advice that we have at this time.
All right, very good. Thank you. If a company has a probationary period of 3 months, can they impose a rule that states that an employee cannot call in sick, and if they do, they are dismissed?
If you're using just a standard sick time policy that's, the bare minimum of what the state law requires, the employees are not actually eligible to use the sick time that they accrue until their 91st day of employment.
All right. Good, thank you. Now, do existing employees need to complete the new I-9s, or is this going forward with the new employees?
This is a moving forward law, so all of your existing employees, as long as they have a compliant and valid I-9 on file, they're good to go. Anyone hired and starting, January 21st, moving forward, will have to complete the new one.
All right, thank you. Now, an employee who is on family leave and who is also on group health insurance continuation coverage, what if that employee does not keep up with their payments of the premiums? Can the employer cancel insurance coverage then?
That's a great question. And the answer is really, it depends. There are more factors than just what the law says, because you have to refer back to what your policy says too. So you have to check with your agent and see what your actual policy says with your insurance company, as well as what your policy says in your handbook. And ultimately, because Oregon is such an employee-friendly state, as an employer, you should make every effort to recoup those premiums from that employee in an agreeable way. So whether that means making payments ahead of time if it's foreseeable leave, like parental leave, or putting them on a payment plan upon return to work. And we can help you with that.
Oh, wonderful. Thank you. Can sick leave and vacation leave be combined, or must it be separated and distinguished?
Absolutely. You can combine your sick time policy and your vacation policy and wrap it up into one paid time off policy, a PTO policy. You just have to make sure that the policy is substantially equal to what the Oregon sick time law says you have to offer as minimum requirements. And make sure you track the time accordingly. It's very important that you track the reasons that your employees are absent from work.
Thank you. Okay, so this is pertaining to the small group and health insurance. How many employees constitute a small group for health insurance?
That's currently 50 employees. When the Cover Oregon first rolled out, they were going to bump that up to 150 employees, but the small business exchange, such as that it was envisioned, never fully materialized.
Are employers required to provide group health insurance to the employees?
No, they're not. If you have more than 50 employees, the law is still on the books that if you're not providing health insurance and you have more than 50 employees, then you'd be subject to a penalty, roughly about $250 per employee.
Okay. Well, thank you very much. Well, thank you. Those were all great questions, everyone. We have come to the end of today's webinar, but please do give us a call or submit additional questions you have at www.cardinal-services.com, Ask HR, and please feel free to browse our website for many other valuable HR topics. Thank you again for joining us today, and I hope these updates were helpful to you. Have a great day, everyone.